So this is our team in country currently, and what you'll see is overwhelmingly Ghanaian. And one of the nice things about this, as we work through COVID, there was no problem to continue working because the quality of the staff in country in Ghana. The speed reading there. Okay, so in terms of the history of the project, we picked it up in 2016. We started the beginning of last year with 20 million tons in resource. We subsequently moved that up to 30 million tons, and we've moved it up again to 35 million tons. Based on what we were doing with the 30 million ton resource, that was the basis of a PFS that we did last year. We'll come back to that later. But a very significant resource now at 35 million tons, 4/5 of that in the measured and indicated category. This is a very good base which we're working on. As I've mentioned, we work in a very good mining jurisdiction. So Ghana's over 100-year history in gold mining. Very straightforward process in terms of very clear boundaries in what you have to do to take the project through licensing. And one of the things I like, and Chris talked a little bit about Sigma, people often compare on the ESG side of the project the same characteristics that you see at our project in Ghana. So a very small environmental footprint. It's also an all-spodumene project, and same characteristics as what you see in Brazil and indeed in Western Australia. In terms of the economics of the project, and again, we'll come back to this later, they are exceptional. I've worked in the mining industry for 25 years, and I don't think I've seen a circumstance before where you're calculating your payback in weeks. Normally we're calculating them in years, so this is just a phenomenal opportunity. I think the most important thing for us is we think we can continue to grow the resource, but what we want to do now is to go to production, obviously to provide for what is currently the boom, which Chris set out earlier in terms of lithium. I think it's a wonderful opportunity, and we're targeting to be in production 2 years from now. Just looking at our cap structure here, we currently have a market capitalization of around 300 million. We're listed on the London AIM market. We're also listed in Australia, and we're on the OTC. We have a strong cash balance, and we'll come back to in a minute. We also have a very strong funding partner, so actually we don't need much funding for this project, even though, given the nature of the project, it's relatively low capex. In terms of our shareholders, we have some very strong shareholders on board. So the first of all is Assor, which is a large South African group which produces iron ore, manganese, and chrome. They've been with the company since the very beginning, 9 years ago. They liked our exploration portfolio. They really like our lithium project. They offer a lot of value in terms of helping us in terms of the development stage of the project. And more importantly, you can see the enthusiasm they have. They've looked through the project. They've tried, if you like, to break the economics of the project and just can't find a way. And some of you may have seen that Assor have continued to grow their stake. So they're allowed to increase it 3% every 6 months, and that's exactly what they've been doing. So now a quarter of our shares are in their hands. Next up is Piedmont Lithium. They are also our partner in the project, so they've also bought in at the top co level. And after that, we see the Electrification and Decarbonisation Fund, which has been buying on market, now owns 4% of the stock. And one of the things we're seeing this in the last sort of few months is increasing institutional interest in the stock, given we're now de-risking it through the permitting stage. Just coming back to those Tier 1 ESG fundamentals. So what's really nice about this project, and it all feeds through into low capex, low opex, is our situation in Ghana. Obviously, as I said before, a very strong mining jurisdiction, 100-year history. And what that gives us is good infrastructure and indeed a highly skilled workforce. In terms of the infrastructure available to us, we actually sit a very short distance from a main highway, so 800 meters from the main highway, which is a paved road, and that leads directly to the Takoradi port, which is a mineral handling facility. So it already processes manganese and bauxite, no problem at all, also taking the feed from our mine. We have, in terms of power, because of the nature of the spodumene deposit, we only have to do a gravity circuit, so that's DMS, nothing more than that. And that means a low power requirement, so that's a good start. But actually the grid power runs directly over the site, so we don't have to do anything in terms of bringing that in. So all of this adds up to a very strong situation in terms of our environmental situation, as well as low capex and low opex. In terms of the local community, we've always been very engaged with the local community. Very fortunate for us, the project site itself, even though we're in a part of Ghana relatively close to the coast, and where there's more population in this particular area, actually where we're working, there isn't that much in terms of habitation. It's quite a hilly area, doesn't lend itself well to agriculture. So when we actually come to moving people, we're talking about moving households rather than communities. In fairness to Ghana, it moves entire communities quite regularly, so it's not a big issue in country. We take preference in employing people from the local community, and we've done so since the start of the project. And indeed, as we move forward, we also have set up a community development fund. So that was included in our PFS study, and that provides substantial revenue through the life of the mine for the local community's benefit. So where we are today, looking at the PFS study, and we'll come back to what our expectations for the DFS study, which are coming around mid-year. We're looking at 250 million tonnes of production, and 50% of that is currently agreed to be sold to Piedmont Lithium on the basis that they're earning to 50% at the intermediate holding company level. So they're providing most of the funding here. So we'll come back to the funding position later, but we're looking at the PFS at 125 million required funding. Piedmont provide nearly 100 million of that. So we actually have to provide very little very little additional funding beyond Piedmont's contribution. And indeed, the payback is so fast, our options for that are very good. And that's highlighted here in terms of we have 50% of the offtake still available, a lot of interest in the product, and so we have an opportunity there to provide funding if we need it, but frankly, we don't need very much funding at all. I'm going to ask Amanda to talk about geology.
So what do we have? We have 35 million hard rock spodumene project in Ghana. It's predominantly coarse grain. There's crystals the size of your arm and leg through there. It will produce Ghana's first lithium mine, which will make a high-grade sustainable lithium concentrate. Right now, we have 80% of the deposits in measured and indicated. We have a robust exploration and drilling program, and what that means is that it consistently turns up what we expect when we do these work. We have a portfolio of 560 square kilometres in Ghana. There's multiple pegmatite fields. There's a historic lithium occurrence further towards Accra that we have a tenement on as well. We've been focused on the 12 square kilometres called Awoya, on a very small part of the project where we found this 35 million tonnes. As I said, we have a systematic exploration program, and there's room for upside on all of our tenements. You'll see that we're only 110 kilometres on the coast from port. As I said, the pegmatites behave very well, very consistent, and it always delivers. We have outcropping at surface, and we have low strip ratios in the first few years. It's pretty much 1-to-1. You can see there it comes right up, and it's kind of like a bath shape, and it's open at the bottom. Over the life of mine, we have strip ratios of 7-to-1 and 8-to-1. One of the key things about any lithium project is its mineralogy. As we have coarse grain, we're able to do a simple 10 mil crush, which means we have lower fines losses through our circuit. We have low contaminants. It passes all of the tests in terms of what they need to be for the converters. The simple gravity process flow sheet that we're able to do enables us to produce a battery-grade lithium concentrate that we've actually refined into lithium carbonate and hydroxide. Really, it's one of the key things the chemical converters want. We have 50% of our offtake still available, and it's highly sought after. This low cost and consistent conversion through this process flow sheet means that it's what they want to deliver a high-grade battery. This simple type of project with low power and distance support and a skilled workforce enables us to complete our PFS studies. Over to you.
So, in terms of those PFS numbers, and I will highlight, obviously, we're now moving to DFS, which we expect to do mid-year, and there's some real opportunity to improve on these numbers, but they are truly excellent numbers. We only used an average price of $1,360 for the SE6, so that's pretty low compared to the current market situation, but nevertheless, you come up with some very strong numbers. $1.3 billion in NPV, an IRR of 224%, payback in less than 5 months, 20 weeks under the current scenario, a mine life of 12 and a half years, and this was based obviously on the lower mineral resource estimate that we had last year, and the average life of mine OPEX is under $300. So this is, against the price of lithium today, a truly fantastic opportunity. In terms of the annual production, as I said before, $250 million, opportunity to look to increase that. And indeed, the CapEx is only $125 million. I mean, the characteristics of this project, I have to say, 25 years in mining, are phenomenal. I rarely see something this good. In terms of where we're taking the project next, whoops, take that one. Here we go. So, in terms of where we are today, as I said earlier, we brought in the mineral resource estimate at the beginning of the year, increasing the size. We're now going through the different stages of optimizing the project towards the DFS, which we're looking to do around mid-year. We've got a number of things we have to do, including moving the transmission line because it actually sits directly across the deposit, so we're moving it to one side in the course of this year. And indeed, we're looking to complete the permitting stages in the course of the year. So what you can expect to see over the course of the year is the beginning of Q2, we should get the mining license grant. We then go through the EPA, which is 5 months, and after that we go through the ratification process with Parliament. And our expectation of that is by the beginning of next year we'll have completed all of that process and we'll be able to break ground. That allows us to then start with the ramp up to production, so we have an opportunity for DSO material in the course of next year, and by early 2025 we should be in production. In terms of the significant value that we can also bring forward, as I said earlier, we're now doing the definitive feasibility study. That the mineral resource update that we did earlier in the year feeds into that. So there are two things we can obviously do. One is to increase the mine life, and the second one is to actually bring forward the potential production. Obviously, as we put in the mining license application last year, we're looking to not make enormous modifications, but we think there's very good potential to increase the throughput through the mine, which obviously feeds through into higher production and higher revenues earlier. As Amanda pointed out, we actually have a big opportunity in terms of our license area. We've worked on the postage stamp, as it were, only 2% of it so far, and we're now systematically working through the rest of it. One of the things in West Africa is obviously we have quite a lot of undergrowth, so you often don't see the pegmatites until you trip over them, so we need to work across that area. There are, however, areas we've already identified where you have additional pegmatites, and we think the upside in that portfolio is very good indeed. Beyond that, we're also looking in country at talking with other parties who also have pegmatites that we've identified about partnering those projects in the future. So, bringing it to a summary there, very strong financing position, very strong partner in terms of Piedmont Lithium, so half of the product coming to the US, and indeed an excellent project which we can take forward in a short timeline, so in less than 2 years we should be in production.